Okay, let's unpack this. We're diving into uh, a stack of really insightful material today. It's all about something many of you out there are curious about, investing when you're underage.
Mhm.
We get so many questions from young people about money, about where and how to start investing, how to make smart moves for their future.
Right.
And when you think about investing, your mind probably jumps straight to stocks or maybe like the wild world of
To
crypto.
real estate, yeah.
Exactly, because that's what you see blowing up on social media, right? Everyone's flashing their portfolios, talking about quick gains.
Yeah, those easy wins.
But here's where it gets really interesting.
Yeah.
Our sources suggest something maybe even more powerful for you to start with, something that might truly surprise you because it doesn't involve money at all. Well, not initially anyway.
That's right. And what's truly fascinating here is how the material we've gathered, it frames youth not as some sort of financial limitation.
Which is how it often feels.
Exactly. But instead, it frames it as a tremendous, unparalleled advantage for building wealth. Our core mission with this deep dive is really to cut through all the noise
Yeah.
and provide you with clear, practical, and, truly actionable advice on how to build an incredibly strong financial foundation, starting right now from a young age.
Okay.
This isn't just about stacking cash in a bank account. It's about making those foundational early decisions, the ones that will shape lifelong habits, cultivate a powerful mindset, and ultimately set you up for real financial success and independence years, even decades down the line.
Wow.
It truly matters because the choices you make now, even the ones that seem small, insignificant maybe, they can have an absolutely monumental positive impact on your financial future.
It's so easy to feel like opportunities are completely out of reach when you're underage, isn't it?
Totally.
You might scroll through your feed and see all these adults talking about their, diversified portfolios, their properties, their crypto gains.
Right, the whole 9 yards.
And you think, well, I can't do any of that yet. I'm too young. I don't have enough money.
Yeah.
The system isn't set up for me.
Yeah, that's a common feeling.
And you're right. In a way, the traditional paths might seem closed off. Our sources acknowledge that. While some things are indeed out of reach right now, there are other things that are not just within your reach, but are absolutely crucial for you to tackle at your age. The common perception, often fueled by what we see online, is that investing immediately means buying stocks or dabbling in crypto or maybe even real estate.
Right, the flashy stuff.
And don't worry, we'll absolutely talk about how to navigate those traditional investment avenues later in this deep dive.
Yeah,
We'll get there.
definitely.
But as our sources strongly suggest, these might not be the best first investments for you. They might even be, well, kind of detrimental if you start there. There are two main, very practical reasons why traditional monetary investments aren't necessarily the ideal initial steps for minors.
Okay.
The first is a common one, a significant lack of, well, sufficient financial knowledge.
Right. Knowing the how and why.
Exactly. One of our sources shares a really compelling personal anecdote. They discovered the idea of investing when they were just 14.
Wow, young.
Super young, incredibly passionate, excited, full of curiosity. But then they hit a wall.
Ah.
They describe it as this sudden frustrating halt because they simply didn't know what to invest in, how to invest, or even why one investment might be better than another.
Yeah, that makes sense. Overwhelming.
Does that sound familiar to you? You might feel that same passion, that spark about money and growth, but then you're faced with this huge mountain of information, confusing jargon, and just no clear, actionable path forward. It's a bit like wanting to build an amazing treehouse but not knowing how to use a hammer or read the blueprint.
Or even what kind of wood to buy, yeah.
Right. You have the desire, but not the fundamental tools or understanding yet. And the second reason is, quite frankly, limited capital, limited money.
The practical side.
Yeah. Most minors are still students, still living at home, maybe relying on an allowance, or perhaps working a part-time job.
Right. Not exactly rolling in dough.
Not usually.
Yeah.
Even if you're diligently saving every penny, you typically don't have large sums of money sitting around, certainly not thousands of dollars to put into the stock market or buy property or make big crypto purchases.
It's true.
So if you're sitting there thinking, I don't have a huge pile of cash to invest, you are absolutely not alone, and our sources completely validate that feeling. It's a realistic constraint for most young people.
Absolutely. But here's where we connect this to the bigger picture, and this is a truly fascinating insight from the material we've looked at.
Okay.
These things, lack of knowledge, limited capital, they aren't drawbacks at all.
Really?
No, they're actually enormous hidden strengths. Your current situation isn't a disadvantage to your financial future?
Yeah.
Not at all. Instead, it offers you the most valuable, irreplaceable resource you possess right now.
Time.
Time. Your time at this age is incredibly abundant. And more importantly, it's what we call cheap time.
Cheap time. Okay, explain that.
Let's really lean into this concept. Think about it. Your time doesn't yet have a direct, immediate hourly cost attached to it in the same way an adult's time does.
Ah, okay. Like I'm not trading hours for rent money yet.
Precisely. You're not typically trading your hours directly for a paycheck that covers all your living expenses. This gives you immense freedom and flexibility. Now, contrast this with an adult. Once you start working full-time or even part-time to pay bills, every hour you spend learning something new or pursuing a passion project or even just relaxing,
Yeah.
it comes with an opportunity cost.
Okay. The money you could have been earning.
Exactly. That's the money you could have been earning during that time if you were working. And this opportunity cost is a huge psychological barrier and a practical one for adults.
I can see that.
It often holds them back from investing time in learning new skills or deeply enjoying life because they constantly feel like they're losing money by not working.
Right. I can't afford to take time off to learn X.
Exactly. They might say, I can't afford to take a month off to learn to code. I'd lose my salary. But you don't have that immediate burden. You can devote hours, days, even weeks to exploring, experimenting, learning, failing, and trying again.
Without that financial clock ticking so loudly.
Precisely, all without the direct financial pressure of a lost paycheck. This freedom allows for immense learning, exploration, and self-investment without that immediate financial crunch.
Okay, that makes sense.
So this raises an absolutely important question, which our sources tackle head-on. If money and traditional investments aren't the best first step for minors, what is?
Right. What should you be doing instead?
What should you be investing in right now, leveraging this incredible superpower of cheap time?
So if time is truly your superpower, if this cheap time is your greatest asset, your most valuable currency, how exactly do you invest it? Our sources lay out the absolute best places to put that valuable time and energy, and you'll quickly realize the first and most crucial investments, they don't involve money at all.
Not directly, no.
They involve you. They are about building your internal foundation first. 2.1.
Yeah.
Investment, #1, time into financial education. Okay, let's jump into the first major investment of your cheap time, putting it into genuine financial education.
The bedrock.
Exactly. It's incredibly easy to fall for that widespread myth that more money solves everything.
Oh, yeah. We see people with wealth and we assume their problems just disappear.
Right. But that's so far from the truth. In fact, more money without knowledge can create even bigger problems.
Definitely.
Our source presents a really interesting thought experiment that illustrates this brilliantly. Imagine you suddenly got $1 million. For free. Dropped right on your doorstep.
Okay, nice problem to have.
Right. What would your immediate reaction be? Most people would instantly think, amazing, I'll invest it. But then what?
Yeah, the how.
Think about the specifics. If you decided to invest it in the stock market, which stocks would you pick? How would you even begin to analyze companies to make smart choices?
What platforms are safe? How does it even work?
Exactly. What platforms are legit? And what about the actual process of buying and selling? It's not automatic. Or what if you thought about cryptocurrencies? They've been so popular.
Pretty volatile, though.
Totally. You'd need to understand market volatility, the difference between thousands of digital currencies, how to spot scams,
Blockchain, wallets, security.
the nuances of blockchain technology, and the critical importance of digital wallet security things that are anything but intuitive.
Definitely not simple.
What if real estate seemed appealing? How would you pick the right property? How do you even assess if it's a good deal?
Tenants, taxes, maintenance.
Right, finding good tenants, managing property taxes, upkeep, or maybe you'd want to start a business with that $1 million.
Okay.
What kind of business? How would you make it stand out? What's your industry experience? How would you hire, manage, market?
So many questions.
These specifics highlight the fundamental problem. Money without financial education is often just money waiting to be mismanaged or, frankly, lost.
Exactly. That thought experiment powerfully reinforces a core truth. Money alone isn't the solution. Financial education is the solution.
The know-how.
The know-how. You need to learn how to invest, how to manage your resources effectively, how to create value in the world, and how to administer your money wisely. It's about building the knowledge, the mindset, and the skills to handle wealth responsibly and grow it sustainably, not just acquiring it by luck.
Makes sense, like learning to drive before getting a fast car.
Perfect analogy. Would you try to fly an airplane without learning how it works, how to navigate, how to handle emergencies? Of course not. Money is a powerful tool, but it requires instruction. Don't wait for financial problems to pop up and force you to learn. Get ahead of them.
Use that cheap time now.
Exactly. This is the perfect time with your abundant, cheap time to make these incredibly smart decisions that will positively impact your life for years, even decades to come. This is truly the path to wealth, building your internal capacity first, not the other way around.
So where do you find this education?
Well, our sources suggest you can find this kind of education readily available, often for free or low cost. There are countless resources online. Reputable YouTube channels focused on personal finance, money management, business strategy, wealth creation.
Okay.
Look for blogs from trusted sources, free online courses from universities like Coursera or EdDX, or even community workshops if they're available near you. The key is to seek out information from diverse sources, question assumptions, always apply a critical lens.
Don't just believe the first thing you see on TikTok.
Please don't. Apply a critical lens to what you're learning. This foundational knowledge is truly the bedrock for any future financial success. 2.2. Investment. #2. Time into exploring your professional path.
Now, for the second big non-monetary investment of your time as a minor, deeply exploring and figuring out what you truly want to study or what career path genuinely excites and fulfills you.
This is a big one.
Huge. Our future often hinges significantly on our career choices, and professional education can feel like a monumental decision, especially when you're young, and feel that pressure to get it right. One of our sources shares a personal story about how they decided on their university path at 16. They'd known what they wanted since they were 14, actually, when they first learned about the stock market.
Oh, wow. Very focused early on.
Yeah, and luckily for them, that very early and clear choice worked out beautifully. However, the reality for many, many people is that they rush this decision.
Yeah, I see that a lot.
They pick a major or a career path based on parental expectations or what their friends are doing, or maybe just a vague idea of what sounds cool or prestigious.
Or pays well, supposedly.
Right. They often make mistakes, realize it's not for them, and end up changing careers midway through their adult lives or even earlier.
Which can be stressful and costly.
Absolutely. Now, to be crystal clear, changing paths is perfectly fine. It's actually a sign of wisdom and adaptability to change your mind if you're unhappy or find a better fit. No shame in that.
Not at all.
But if you can invest serious, dedicated time now, as a minor, to truly explore, research, and deeply understand different career paths.
Using that cheap time again.
Exactly. You can avoid a tremendous amount of wandering, financial strain, and ultimately save a significant amount of lost time down the road. This early, deliberate exploration is an absolutely excellent move for your future self.
It's leveraging that unique advantage you have right now. And what's fascinating here, a point the sources really emphasize, is the practical advice on how to explore.
Okay, not just daydreaming.
Right. It's not just about idealizing a profession based on movies or those rare, ultra-glamorous success stories you see online. Instead, our sources strongly encourage you to ground yourself in reality. Research people who are actually in the career you're considering.
Dig deeper than a quick search.
Way deeper. Find the most successful individuals you can who pursued that specific field, not necessarily the billionaires, but people who are successful and seem fulfilled at various levels within that industry. And here's the crucial, realistic check. If you don't see yourself reflected in their daily situation, if their challenges, their typical tasks, their work-life balance doesn't resonate with what you genuinely envision for yourself, then it's probably not the right path for you.
That's a really good point. Be honest with yourself.
It's so easy to get swept away by the glamour or choose a path because it sounds impressive, but you have to be brutally realistic. Seek out opportunities for informational interviews. Even virtual ones are easy now. Ask people what their day-to-day work truly looks like.
Get the real scoop.
Exactly. Consider shadowing someone for a day, if possible, or volunteering in a related field. Try free online courses that teach specific skills within that profession.
Like test the waters.
Precisely. If you think you might like design, take a free online graphic design course. If coding interests you, try a beginner's Python course. See what people who actually studied your chosen field really do, not just what they post on Instagram. This way, you can genuinely gauge if it's the right path for your life.
Makes sense.
Remember, you'll potentially be dedicating years of your life to learning about this field and then many more years working in it. So try to find a good balance between, professional admiration and genuine passion for the subject matter. At least pick something you enjoy learning about or something from which you can gain significant transferable skills.
Right.
And if you envision starting a business in the future, which we'll talk more about, make sure the tools and knowledge you learn in your studies will actually be useful for that entrepreneurial journey. Always try to create a clear vision for what you want to achieve and check if your current actions are moving you closer. If they are, you're on the right track.
Good as ice.
And don't forget the importance of those soft skills, leadership, communication, critical thinking, problem solving. These are universal assets, valuable everywhere.
Tool helps, but it's not everything.
Exactly. School alone isn't enough, but it's a fantastic strategic start.
Okay, so we've talked about investing your invaluable time, which truly builds that incredible intangible foundation.
The non-monetary stuff first.
Those non-monetary investments are the absolute first steps, setting the stage for everything else. But what about actually putting some money into play?
Right, the part people think of as investing.
Because that's what many of you think of, right? Our sources have some smart, incredibly accessible ways to do just that, even if you don't have a massive amount of capital saved up.
Small steps can make a big difference here.
Exactly. And to be clear, these aren't about huge sums. They're just enough to get you started, to build momentum and gain real-world experience. 3.1, investment. #3, money into buying books.
Ah.
All right, the third best investment our sources recommend for minors. And this one might sound incredibly simple, maybe even old-fashioned,
Powerful.
but it's a complete game changer. Investing your money by buying books.
Yeah, actual physical books or ebooks, whatever works.
Think about the unparalleled power of a book. It offers years, sometimes decades, of empirical knowledge, literally at your fingertips.
It's like downloading someone's brain almost.
Totally. These are lessons that cost people entire lifetimes. To learn lessons from hard-won experience, deep research, countless failures, painstaking analysis, and you can absorb all that accumulated wisdom, those concentrated insights, by simply reading just a few hundred pages.
The ROI is potentially massive.
It's an incredible return on a very, very small investment. The advice is to choose books directly related to the skills you want to develop.
Financial literacy, business, entrepreneurship.
Or even specific personal growth areas. Don't underestimate how potent this can be.
And building on that, if you struggle with developing a consistent reading habit, which is very common.
Yes, staring at a page can be tough sometimes.
It can. Our sources provide some brilliant practical advice. They suggest start with what you genuinely enjoy.
Don't force the boring stuff right away.
Exactly. Don't force yourself to dive into overly complex financial texts or dense business biographies on day one if you're not ready or don't enjoy it. If you love fantasy novels like Harry Potter or Lord of the Rings or graphic novels or even engaging nonfiction about your favorite sports team, start there.
Get the habit going first.
Precisely. The goal is to build the habit of reading daily, to make it a natural, enjoyable part of your routine, like brushing your teeth or something your phone. Once that habit is solid, once reading feels natural and enjoyable, then you can gradually, seamlessly move on to more complex books, or those specifically focused on the skills you want to acquire, like personal finance or business strategy. And the key here is consistency over quantity.
Little and often.
Yes. Don't force yourself to read 100 pages a day, or even 50. Reading just a few pages consistently every single day is far more effective for maximizing knowledge and truly benefiting from this investment.
Make it sustainable.
It shouldn't feel like a chore. It should be sustainable and enjoyable. And to really maximize your learning, consider taking notes, highlighting key passages, maybe even discussing what you've read with a friend or a parent.
Make it active.
Exactly. That active engagement helps solidify the information. This seemingly small investment in books will bring many profound future rewards. It'll significantly boost your financial literacy, expand your worldview, enhance your critical thinking,
And give you an edge.
and give you a knowledge base that very few of your peers will possess. It's like planting intellectual seeds that will blossom into profound understanding and wisdom down the line, setting you apart. 3.2. Investment. #4. Money into developing a small business.
Now, for the fourth best investment, and this one might really surprise you, or maybe make you think, uh-oh, I don't have enough money or my parents won't support this.
It sounds intimidating, maybe.
It can, but our sources call it one of the absolute best decisions you can make as a minor. Investing your money, however small, and your cheap time into developing a small business.
Okay, why so powerful?
First, and most importantly, it gives you a real, tangible, hands-on taste of business life.
Learning by doing.
Exactly. You might have learned a lot about financial education, wealth principles, managing money from books. Great start. But there's a huge fundamental difference between learning about money and actually creating it yourself from scratch by providing value to others.
Getting your hands dirty.
Starting a business, even a very small, simple one, will give you invaluable experiences and learnings for both your personal and professional growth that no textbook or online course can provide.
It's real-world feedback.
Totally. It's not theoretical anymore. It's hands-on, practical, real world. You're learning by doing, interacting with real customers, solving real problems, handling real money.
Those lessons stick.
The lessons you learn from building something from the ground up are truly priceless.
And here's the crucial part, something many young people often misunderstand. You absolutely do not need a lot of money or even a perfect, fully formed product to start.
Really?
Yeah.
So I don't need, like, venture capital?
Haha. Definitely not. Sometimes you don't even need a physical product at all. You can begin with a service where you're essentially trading your time and developing skills for money.
Okay, like what?
Think about low-cost ideas relevant to minors. Can you offer online services like tutoring younger students, managing social media for local businesses, simple graphic design, maybe content creation?
Stuff you could do from a computer.
Right.
Yeah.
Or maybe reselling items you find at thrift stores, or doing online arbitrage, or local services like pet sitting, lawn care, washing cars, helping elderly neighbors with tech support.
Things that use your time and maybe a little effort.
Exactly. These all require minimal startup capital, sometimes almost zero. The leverage you gain from this early exposure to professional life and wealth creation is immense. Simply understanding how a business works from the inside, how to sell something, what marketing works, what doesn't, how to manage simple finances, how to interact with customers. This gives you unique future leverage. Very, very few of your peers will ever have that kind of insight so early. Our sources share that they've had businesses in their youth that weren't, huge runaway successes.
You to become Google.
Right. But they are not ashamed of them because every single one taught valuable lessons that still help them perfect current businesses and develop new ideas.
Learning from experience.
Remember, your teen years and early 20s are truly the prime time to sow seeds for a future harvest. The faster you gain this kind of practical knowledge, hands-on experience, maybe even start generating your own money,
The faster you grow.
the faster you'll achieve significant financial and professional success. And here's a critical point, a mindset shift you need to embrace.
Okay.
These early businesses might not work out. They might fail. They might even flop spectacularly.
Oh, that sounds bad.
It feels bad in the moment, but the experience and the lessons you gain from those failures are absolutely, unequivocally invaluable. So, if they fail initially, do not get discouraged. Failure is not the end. It's a fundamental, unavoidable, and often accelerating part of success.
Faster you fail, faster you learn.
Exactly. The faster you fail, the faster you can learn, adapt, iterate, and ultimately succeed. Think of failure as tuition for the most valuable education you can get.
All right, we've talked about investing your time, that crucial non-monetary foundation.
Education and career path.
Right. And then strategically investing small amounts of money in things like books to deepen your knowledge.
And the entrepreneurial leap, the small business.
Taking that bold step, those are all about building your personal capacity, gaining real-world experience. Now, finally,
The more traditional stuff.
let's talk about getting into the more traditional investment world, but with a crucial, special twist designed specifically for minors. The fifth and final recommendation from our sources is to create what's called a custodial account.
Ah, yes. Very important.
This is a truly essential step for getting into formal financial investments before you turn 18. So what exactly is a custodial account? It sounds a bit technical.
But the concept is simple.
It is. Think of it like getting your learner's permit for driving, or maybe driving with training wheels.
Good analogy.
It's an investment account that's legally managed by your parents or another trusted adult. Why? Because you're underage and can't legally sign contracts for yourself yet.
Right. The legal aspect.
But here's the best part. You, the minor, get to actually manage the money inside it.
You call the shots on the investments.
Exactly. You choose what stocks or funds to buy, you decide when to sell, you track the performance. And then the magic moment. Once you turn 18, or sometimes 21, depending on where you live,
It's all yours.
you gain full and complete control over that account and all its assets. Essentially, your parents use their adult status to open an investment account for you, allowing you to start investing in the formal markets make real trades, and get practical experience long before you're legally old enough to open your own.
It's a fantastic way to learn the ropes with real money, but with that safety net and guidance from an adult. Now, the investment world, while it seems vast and complex, generally boils down to two main types of investments: fixed income and variable income.
Okay, break those down.
Fixed income typically offers a, well, guaranteed or at least highly predictable return with lower risk. But as you might expect, it also usually means lower potential returns.
Safer, but less growth potential.
Exactly. Think of it like this. You lend your money, and in return, you get a fixed amount of interest back. Common examples familiar to most people include basic savings accounts. They pay a tiny bit of fixed interest. Or certificates of deposit, CDs, where you lock up your money for a set period and earn a slightly higher fixed rate. Beyond that, there are government bonds like seats in Mexico or treasury bonds in the US. You're essentially lending money to the government, and they promise to pay you back with interest.
Super safe, usually.
Generally considered very stable, yes, and minors can invest in these, usually through that custodial account. However, what's truly fascinating here, and a key recommendation from our sources for young investors like you,
Yeah.
is that for minors, the personal recommendation is to actually take more calculated risks and heavily consider variable income.
Okay, so the riskier stuff.
Potentially riskier, yes.
Yeah.
This includes assets like stocks, those small pieces of companies, or cryptocurrencies, the digital assets. These types of investments don't guarantee future performance. The
Yeah.
value can go up.
And down. Sometimes way down.
And sometimes way down dramatically. They come with higher risk, absolutely. But they also offer much, much greater potential returns over the long term.
So why is that higher risk suitable, even recommended for minors? That seems counterintuitive.
Well, think about your situation. At your age, you have tremendous freedom and very few financial responsibilities compared to an adult.
No mortgage, no kids usually.
Exactly. This means you can afford to take on more risk than someone who might be saving for a house down payment next year or trying to fund their retirement in 5 years. Time is profoundly on your side for long-term growth.
The compounding effect.
Absolutely. If you invest in a company's stock or a promising project, it has years, even decades, to mature and potentially grow significantly. You have the freedom and the precious gift of time to simply wait out market fluctuations.
So if the market crashes, I don't need the money right away.
Precisely.
Mhm.
Markets will always go up and down. It's part of the game. If your investments don't pan out immediately, or if the market dips significantly, you have plenty of time to recover that capital. Maybe by investing more during a downturn if you can, or by leveraging that financial education and maybe the income from your small business to earn more and reinvest. Contrast this with adults. They often have less time, more immediate responsibilities, mortgages, kids' education, rapidly approaching retirement. Way more pressure. For them, a significant investment loss could be financially devastating. For you, now, investing a smaller sum in a variable asset, even if it doesn't pan out exactly as expected,
That's a learning experience.
it provides an incredibly valuable real-world lesson without those catastrophic life consequences. Therefore, this is truly the best time to take calculated risks and let them grow for the future.
Okay, but calculated risks,
Right.
not just gambling.
Absolutely. And this is the crucial caveat. This absolutely doesn't mean investing blindly or throwing your money at the latest meme stock or hyped up crypto coin. It means diligently studying, consistently learning, getting financially educated with those foundational investments we discussed earlier, reading books, learning online, getting practical experience.
Use the knowledge first.
Use that knowledge to make the best, most informed decisions with your money within that custodial account. Research, research, research before you invest a single penny.
Where do you set up these accounts?
Common platforms for custodial accounts include major brokerage firms like Fidelity, Charles Schwab, or Vanguard. Check what's available in your country. Start simple. Maybe look at broad market index funds or ETFs first. They give you instant diversification. And learn about the specific companies or assets you're investing in.
Got it.
The earlier you start, the more time your money has to compound and grow. It's that magic of compound interest over decades that can potentially lead to incredible wealth by the time you're an adult.
So what does this all mean for you, our young listeners?
Yeah.
Let's sort of wrap this up. We've covered how your youth isn't a limitation. It's actually your biggest, most underrated asset, this incredible period of cheap time.
Your superpower.
We've explored the immense foundational power of investing your time and learning first through dedicated financial education, really getting the basics down.
Building that knowledge base.
Then, by really exploring and understanding your true professional path, figuring out what you want to do.
Saving future you some hassle.
Definitely. We then moved into the strategic value of putting some of your hard-earned money into buying books to deepen your knowledge.
Small cost, huge potential payoff.
And taking that bold entrepreneurial leap by developing a small business, getting that hands-on experience.
Learning by doing, failing fast.
Exactly. And finally, we discussed how to navigate the traditional world of finance through custodial accounts.
Your entry point to the markets.
Taking those calculated risks that are uniquely suited to your age and your incredibly long time horizon.
And if we connect all of this to the bigger picture, the real profound takeaway here is that true financial independence doesn't start with a lump sum of money or getting lucky with one hot stock pick.
It's not instant.
No, it begins and it flourishes with the consistent cultivation of knowledge, hands-on experience, and frankly, calculated courage. The investments we've discussed today aren't just about growing your bank account, although that's a fantastic benefit, let's be honest.
Yeah, that helps.
They are fundamentally about growing you. They are about empowering you with the tools, the insights, the confidence to navigate the complex financial world with skill and foresight for your entire life.
Setting you up for the long run.
Precisely. So think about this. Given what you've heard today, given this new perspective maybe on your cheap time and your unique advantages, what's one immediate, actionable step you can take this week?
Just one thing.
Just one thing. To leverage your youth and start building your financial future, regardless of your current age, what's that first step going to be for you?
Thanks for diving deep with us today. We really hope this deep dive has given you a clear, maybe even exciting roadmap for your financial journey.
Don't forget to follow me for more similar content and leave your comment. Are you ready to start investing from a very young age